Want to thank everyone for joining us this morning on the Trade Exchange week ahead. Just a quick peek at last week. The S&P and NASDAQ are currently up 4 weeks in a row. We saw gains of 3% or more across each index. We saw the strength to end the week as both inflationary prints, the CPI and PPI, both showed a colder view on recent inflation. As we all know, last week was all about inflation. Even with inflation near its highest level since the 80s, the CPI report on Wednesday brought some relief to traders as we saw a drop of spot 6% from last week. Recent weakness in energy and gasoline were one of the key indicators for the drop in the CPI. One other economic indicator, the PPI, also showed a drop from highs from 11.3% to 9.8%. Well, something comical, I guess you can say. Back in April, when we did have that downtick in the CPI, we mentioned this earlier in the week, how many TV personalities and analysts called the peak then. This is where us at the Trade Exchange agree 100% with the Fed. Let's see continued reports of inflation coming in lower before we claim victory on where we currently are. One interesting aspect of this market that has seen a nonstop move have been the small cap Russell sectors in the market. The Russell gained 5% on the week, and the volatility in some of these low flow moves continues throughout the week. We mentioned it last week. We've been seeing IPO names with hundreds, thousands of percent moves on the initial day. So we are watching this area, maybe to give us some sort of an indication on when the market may have seen some sort of an exhaustion move. So we are watching these small cap names since they are the leaders in this run as well as the NASDAQ. So keeping a close eye on that, keeping a close eye on the NASDAQ to see if there is any exhaustion coming this week. Another positive indicator that we saw was consumer sentiment with its second monthly gain, and the inflation expectations, a part of that report, did drop, but are still at the elevated levels. By looking at the market the past 4 weeks, how can we really say we are in a recession? Unless this is a bear market rally, which many people have said that this possibly could be. According to statistics and data, this is a level where we have reached the upper echelon, I guess you can say, of what a bear market rally is supposed to be like. So we'll see if that correlates into any market activity this week. One final thing that we can say about the CPI and this inflation report, as we've been saying for weeks on end, is keeping an eye on these commodities. If you break down the CPI, the key area of weakness was energy. The other area we saw was a drop in airline fares. So we say this, as we've said numerous weeks previous to this report, watch commodities, watch oil. If we see a drop in the CPI with a focus on the energy and airline fares, which is in reality lower possibly due to energy prices, we believe keeping an eye on energy and seeing if it does rise back above that 100 level, we would love to see how that will interpret into next piece of the CPI. So on our side, when it comes to inflation, we're watching energy. We're watching the impact it has, energy and commodities, and the impact it will have on future CPI and PPI reports. So taking a look at the week ahead, right off the bat, we have looking at the upcoming U.S. and world events. Top earnings this week. Seems like we have a retail bonanza on earnings. We have BJ, we have EL, Home Depot, Kohl's, Lowe's, Target, TJX, Tapestry, Walmart. So we do have a lot of big retail names reporting this week. When it comes to throughout the week on Monday, we do have Fed Speaker Waller. We do have the release of the continued release of the hedge fund 13Fs. As we mentioned on this 13Fs, keep in mind that these are reports from previous quarters. So putting too much, looking into this too much is something that we don't really recommend. But it gives us an idea of what hedge funds are or have been purchasing or selling in recent quarters. On Tuesday, we're looking at the U.S. housing starts and permits and industrial production. Wednesday, we have retail sales, and we do have your FOMC minutes. Keeping an eye on a little more detail in what the Fed was discussing at last Fed meeting. Thursday, we have Fed Speaks George and Kashkari. We also have existing home sales in the U.S. On the European side and Japan, we do have their CPI reports on Thursday, so we'll be keeping an eye on how their inflation is compared to our reports last week. On Friday, we have double witching on options expiration, and not much else following that week. Company events for the week, not much on the agenda. It is the summer. We do have these summer doldrums, so not much activity coming up on company events for the week. Top conferences as well. As always, if anybody has any questions or comments in regards to conferences, shoot us a message in the news desk, ask the desk, and we'll provide you if there are any specific companies that are reporting or will be featured in these conferences. We added this week a CPI data chart. As we can see, the increase and the small downtick. What we were talking about before is that April month, when we saw an 8.5% print, then we saw that downtick where a lot of people were saying that could have been the top of inflation, but then we just see the pop back up. So we are watching these levels, on the CPI, which we believe is one key indicator on any future moves in markets. Economic calendar for the week. Going through day to day, what we will be looking at on our side, we have your Fed Speak on Monday, Christopher Waller. On Tuesday, housing starts and permits. We also have industrial production. And for the oil traders, we have that API crude oil report on Tuesday after hours. On Wednesday, retail sales, FOMC minutes. We believe these are the two key reports for the week. Thursday, as always, we have initial jobless claims. We'll have your existing home sales, and we do have Fed Speak as to George. And on Friday, not much action, the typical Baker Hughes rig count, but we also do have double witching that we'll be watching on the option side. So that's your economic calendar for the week, and we'll see if they have any impact on markets following last week's CPI and PPI report. Earnings, as always, as we mentioned in the beginning, it seems like it's a retail week. We'll be keeping a close eye on Target, TGT, and Walmart, WMT. Walmart does report on Tuesday morning, as also Home Depot as well on Tuesday. So we'll be keeping a close eye on that. Wednesday, we have Lowe's, Target, TJX. So with earnings season winding down, we do have some big names reporting this week that we'll be keeping a close eye and ear on. Moving forward, we added a little fear and greed index. A lot of members have been asking us to add something like this into the report. Currently, we are seeing a neutral to a greed look in markets following the recent run-up the past 4 weeks. Weekly sector performance, we've seen strength across the board, green across the board. Last week, we did see weakness in energy. This week, it's strength in energy. So energy, financials, materials, communication services, we are seeing strength across the board this week on markets. So keeping that in mind, it's not one area that is moving. We are seeing a broad-based rally in markets. In these comparisons, the uptick continues. This is COVID, and we are seeing markets continuing higher following that initial downtick that saw the lows in June. So we are watching these as a picture-wise view on how markets have been acting in the past few weeks. Target probabilities, basically a 50-50 look right now on the 50 basis point, 75 basis point look. We have seen this number move throughout the week. Beginning of the week, the target rate was much higher for a 75 basis point hike. But since the CPI and PPI report came out, this has leveled off to close to a 50-50 look. Year-to-date report returns for the weekend. So we did see upticks in commodities. Nat gas up 20%, heating oil up 13%, Oil up 4%. VIX, one area that got hit because of volatility, down about 9%. Corn up 5%. Wheat up 4%. Coffee, big move this week, hitting green, up over 7.5%. So we are seeing a little pop in commodities as of late. So as we mentioned in the beginning monologue, we are watching commodities as a key play on inflation. We did see how energy was the key area that dropped on the CPI. So we're watching commodities as well to give us any indication in regards to any up move in the inflation view. The AAII Investor Sentiment Survey, the bullishness continues to pop to highs. This week, the bullishness at 32.2% as the bearishness continues to drop 4 weeks in a row from July 42 to 40 to 38 to 36. So we are watching sentiment move to a more bullish view following the 4-week run up in markets. Sector outlook year to date. As always, energy is still the top dog of the week, up 41%. Utilities up 6.85%. We did see, as we mentioned before, we have seen a complete uptick across the board in markets, especially in sectors. So we are seeing a broad-based rally off of June lows. IPO lockup expirations. We have your expected IPOs, since IPOs are the plays of the week, as well as these low float, small cap names. We are always keeping an eye on any of these IPO openings. On the FDA side, another slow week. It is the summer. Monday, we have VTYX. Wednesday, ENSC, and Friday, BLUE. We'll be watching all those throughout the week. Taking a quick peek at charts now. We've added more and more throughout the week. A lot of members have asked us, since a lot of TradeXchange, a lot of the TradeXchange team we're all about technicals and looking at technical charts. We added a few more and more as the TradeXchange week ahead report has been released. Right now, we're looking at the SMH. We mentioned last week this range band here. As it broke, the first day it broke, we saw a nice drop. Testing out that move lower, we are seeing a move back to highs, right back to resistance levels. No changes on this chart. So we are watching a pretty technical move in markets. We added more color on that SMH in each of these notes, but as you can see, it's a retest, and you'll be seeing a lot of this, a retest of resistance levels across the board in a lot of key area markets. This is the SPY. We added once this level last week was broken to the upside, which we've discussed last week, we saw a move straight to the next level resistance that we're watching on the SPYs. Our trend lines, once broken, we see continued move to the upside. So we are watching technical moves on these SPYs as well as the previous SMHs. Another look at the SPY weekly, a pure trend line move to the upside with a test now at those new resistance levels. IWM daily, another look at the VIX, testing those 20 level support levels we've been discussing. 10-year yield weekly, on a weekly look, it's trending right on that downtrend. We did see a little uptick above it, so we'll be watching the 10-year yield if a base is being built for a move back to the upside. So we're keeping a close eye on this 10-year yield. This is a weekly look at it. We mentioned before the IWMs, a pure technical move on the IWM. We added a new resistance level, which we see across right here. We didn't expect to move this fast over 1 week, but since it happened, we had to add that new resistance level. We mentioned last week 3 levels to watch on the upside. The 190 break, which we saw, brought us to the 200 level resistance, which we currently are at. So we're watching this IWM resistance, another area in the market that is hitting current resistance levels. Next, we have HYG. We mentioned last week the 78th level remain as resistance. We ended the week at 78.94 at a higher point, but still in that 78th level. If we break above that level on that volume, that 80 point could be the next point of resistance we're watching. S&P daily, another quick peek on moving average looks to anybody who trades on moving averages. A look at the Qs, triple Q daily on the moving average look. Basically treading right at a moving average plays, technical plays. We believe that this market is very technical, as we've been saying for weeks. Crude oil. We mentioned last week, $95 will be resistance level on the week. We hit a high of 95.05, ending the week at 91.88. So we continue to watch 95s as resistance, $90 as short-term support, with a key on $85 as a key support level. Break above that 95 on the resistance side, we could easily see $100. And once, or if $100 breaks, that will rearrange the whole view on this chart. So we are watching oil as it is one of the key areas on the inflation view. US dollar. Looking at the US dollar, we are seeing a base being built around that 105 level, a downtrend level breaking around 106s, and the US dollar is tested key support levels again this week. So we are watching this level of support being tested a few times throughout the week on a daily, and we are watching an upside move above that downtrend. One final look at Bitcoin. We've mentioned it last week, no changes. It's still in that range, 25,000 to the upside, 20,000 to the downside. So we are watching Bitcoin for any indication move to either area on the top or bottom. So that's our view on the week. We wanted to keep it very short this week. It is a beautiful weekend up on the East Coast. So we're going to enjoy it. Any questions? We're going to move it back up to the calendar. We'll leave it open for any questions to any of the members in regards to the week ahead, in regards to TradeXchange. We'll go radio silent real quick. Questions are open. A quick question in regards to the TX Plus again. So TX Plus, as we mentioned to all our current subscribers, we are giving this as an anniversary gift to all our members. It is free with the upgrade. We'll give a quick peek again at what it is. This is the TX Plus part. So this is what we're looking at right here. This is the TradeWire area. It's a breakdown of SEC filings. You have your filtered feature as well. If you want insider purchases, insider sales, SC13Ds, S-3 ASRs, you have a little filter. So you have a complete breakdown with scraping. So let's say you just trade off of insider purchases. This gives you access to all of the details from that filing. You don't have to open up the filing. ACR, purchases 14,838 shares at 9.392 with the total amount. So this is what that does. We also have the press wire, which is a press release database that gives you full release of the actual press release. So that is what that area does. If anybody have any questions, we can always go back to that. But that is a quick peek at that area to anybody who trades off of SEC filings and that aspect. So we're going to pop back up to the TradeXchange week ahead real quick. And if anybody else has any more questions, we'll answer those. So some of the question in regards to mentioning the commodity focus, anything specific or just across the board, food, metals, energy. For us on our side, we believe one of the key indicators that we'll be watching closely will be the oil side of commodities. We've seen food. We've been watching food. The CPI area in regards to food has been rising steadily on a sticky they call it, it's a possible sticky type of CPI. The food area has been seen continued rising. The area last week that saw the dramatic drop that affected the CPI were energy and airline fares, two of the biggest areas on that drop. We believe that that area correlated with airline fares, because in airline fares, if you see a breakdown of what companies charge, oil and gas and all that is included in an airline fare. So we're watching that as the key indicator on a future move on inflation. When we saw the print, we as everyone else, it was great to see a positive move on the CPI side, on the inflation side. We want to keep an eye on why it moved, to keep an eye on future areas of inflation. That key area that we mentioned throughout the whole spiel of our week ahead has been energy. So we're watching energy. We're keeping a close eye on oil, nat gas. We have seen a little upside move as of late. So that's the area we're watching when it comes to on the inflationary part of that CPI data. As we mentioned earlier, we're watching for continuous move, just as the Fed is watching for a continuous move lower. We always go back when people ask us why we look that way. We always go back to April. We remember watching these financial news shows, everyone touting the top in inflation, the top of inflation, and what happened literally the next month and the month after we broke above 9%. So we wait and see to get a better indication on what direction that is, and we'll wait and see for the next few months to see a hopeful move to the downside on inflation. A couple more, we'll wait for a couple more minutes if anyone else has any more questions. If not, we'll be ending our week ahead webinar. Yeah, so one other thing, members, and if anybody else is watching, we will be doing a webinar at the end of this month on a breakdown of the TradeXchange and the TradeX Plus service. A lot of our members are asking, how to benefit or how to utilize the option side of things or the SEC filing side of things. We're going to start to give a breakdown on how to utilize the service more and more in depth, and we're looking to do that at the end of this month or the beginning of September. So everyone, once again, thank you for joining us this week. Enjoy the weekend. Enjoy your Sunday. The Squawk will be back up Monday morning. Check the news desk to get yourself ready for the Monday Open. Thank you. Enjoy. TradeXchange out.